one of the key conclusions that we've drawn is that the pension savings gap persists. Over a third of people are still not saving for retirement, and this is entirely consistent with the 2 previous iterations. Looking more closely at those not saving, we see that 44% are women, and compared to 34% of men. Also, this is consistent with previous iterations, and it confirms that the pension gender gap persists. We note many differences between countries. Even though there's a pension gap in all the countries surveyed, there's a big difference. On your left-hand side, you see the Netherlands, 16%, versus all the way on the right is Finland, with 67% people not saving. And people have different reasons for not saving. We've asked them to identify one reason. So the figures on the slide amount up to 100%. And the encouraging news is that 58% is interested. So that implies that there is indeed an awareness of the need for retirement saving. Not so encouraging is the fact that those who are interested, 32% are in fact saying that they don't have enough money to start saving for retirement. Some say that they do indeed, that they have started planning, 12%, and in 14% of the cases they are interested, but they would like to receive more information about the options in terms of supplementary pension products. Of those not saving, 8% indicated that they already have other financial means to rely on. Economic circumstances indeed play a role. We asked respondents about the extent to which the current economic conditions, so the high cost of living, the inflation, are indeed affecting or have had an impact on their pension saving plan, and this was the case in 48% for 48% of the respondents. 40% specifically indicated that they were negatively affected by the current economic circumstances, which means that they either reduced their contributions in 18% of the cases, they surrendered their saving plans in 6% of the cases, or they delayed their saving in 16% of the cases. There's also a small portion, 8%, that in fact increased their contributions. And this year we included a new question, as we were very curious to know more about how confident people are that they will be able to maintain a comfortable standard of living after retirement on the basis of their mandatory public and occupational pension scheme. When the overall conclusion is not very positive, when asked to rate that confidence on a scale from 1, not very confident, not at all confident, to very confident, the response was 2.6 on average, so rather unconfident. And also here we see the pension gap, gender gap reflected, as 27% of those are not confident are women versus 18% of men. Moving on then to people's pension saving priorities. Among the survey respondents, the highest priority is the safety of the money invested in 44% of the cases. Also important is the robustness of the provider in 28% of the cases. Interestingly, least important are performance, 15%, sustainability considerations, 11%, and the ability to move savings between European countries, 9%. One thing we note in this context is that individual circumstances play a key role, so age, employment status, and gender. Taking a closer look at those favoring specifically safety over performance, we see that the appetite for safety is higher among women in 86% compared to men, 77%. And there's also a strong appetite for part-time workers, among part-time workers. Then we asked people to indicate if they, how they would like, what their preferences are in terms of pension payout, and we gave them a couple of options. Would they like an annuity? Would they like a lump sum, a drawdown payment, or a combination of all these three? And we gave no monetary projections. And what we see then is that 39% of the respondents say to prefer an annuity, compared to 28% preferring a lump sum. 10% prefers drawdown, and 23%, so also a rather large portion of the respondents, prefers a combination of all these three options. We also asked the same question, but then giving them only two options. Would they prefer a lump sum or an annuity? And then we did give a monetary projection. And then we see a slightly different preference. In case 55% 60% of the respondents then choose a lump sum versus 45% choosing annuity. So this can be explained by the fact that there is generally a bias towards large monetary sums, but also the fact that monetary projections can really nudge people in a certain direction. And for us, this confirms that we might need to help people improve their saving plan through financial education, and to make sure that they don't run the risk of outliving their pension savings. Moving on then to information preferences. Here we see a fully consistent trend, result compared to the previous two iterations, and that is a strong preference for digital disclosure. We see that in all the countries surveyed, with a slightly less pronounced preference for digital in Germany, which is 52%. Content-wise, people prefer the information that they were most interested in receiving is information on cost, both before signing the contract and after signing the contract. 51% prefer information on cost before the contract, and after contract 43%. Also, if interest is information on guarantees, risks, and investment performance. Relatively less interested is information on conditions for changing providers, options available when moving to another country, sustainable investment strategies again. Yes, so that's the top 5 you can see on the screen. Let me then conclude by reiterating the key findings. So first of all, the pension gap persists. 39% of the respondents are still not saving for retirement, and women are still saving less than men. Economic conditions have negatively affected people's saving plan in 40% of the cases. People are overall not confident, they lack optimism about being able to maintain a comfortable standard of living after retirement on the basis of their public mandatory occupational pension schemes. Security and safety remain top priorities, and there's a strong preference for digital. And in all these conclusions, it remains key to emphasize that even though these conclusions are valid for all the markets and people surveyed, there are different circumstances that play a key role, and there are also many differences between countries.